Hi guys, welcome back to my channel, the best place to be wherever you are on your wealth journey right now. Today I want to talk about how to pay off your home mortgage quickly. It's one of those bucket list things that we all want to do at some point in our life, but not all of us want to wait until we're 65 in order for that to happen. Of course, the sooner we pay it off, the sooner we can enjoy the peace of mind which comes from the certainty of having a roof over our head. So what can we do then to reduce our mortgage more quickly? Well, I have 5 tips that might help you with that. Tip number 1 is to make sure that you're on a repayment mortgage on your main residence. Now this is very important for your residential mortgage, but I wouldn't get a repayment mortgage on your buy-to-let properties for all the reasons that I outline in this video just up here. With a repayment mortgage, yes, your monthly payments are higher than they are with an interest only, but every single month you're repaying part of the capital of the mortgage, which means that each month you owe the bank less and less. Now while I'm on the subject of mortgages, now this is not for everybody by any means, but while I'm talking about mortgages, I want to talk about offset mortgages, because those of you with considerable savings might want to consider an offset mortgage for your main residence. This is where you get a bank account linked to your mortgage, so any savings that you have are offset against your mortgage principal. So for example, if you have a mortgage of £250,000 and you have savings of £25,000, then you only pay mortgage interest on £225,000 because the £25,000 savings are offsetting the amount that you pay on your mortgage. Now you can of course draw down on your savings if you want to, but anything you take out of your savings account won't then be offset against your mortgage. So you just need to be aware that if you use some of your savings, your mortgage payments will go up with an offset mortgage. So offset mortgages are really great for those of you that have savings and that you don't want those savings tied up in a property. It gives you the flexibility to draw it down whilst also reducing your monthly mortgage payments. Now most mortgage lenders that offer offset mortgages do restrict the loan to value on this, so you'd need to have quite a low loan to value, say around 60% or so, in order to benefit from an offset mortgage. But if that's you, then I recommend speaking to your mortgage broker about getting that sorted out. Tip number 2, make sure you have a spreadsheet showing you how much you owe every single month. Because as your mortgage reduces each month, the interest you pay will also reduce because you owe less money. Most lenders calculate their interest on a daily basis with mortgages and it gets paid monthly. Now hold on to your hats guys, because I'm about to show you another one of my spreadsheets. We'll go over onto the computer. Okay, so here's my spreadsheet, and if it looks daunting, don't worry, it didn't start off looking like this. I have been paying this mortgage for 3 years now, which is why it's so big. When you start, you only actually need a few lines. The first line here is the amount of mortgage I have outstanding, the initial interest rate, when the rate expires, my initial monthly payment, because the first payment is usually higher to account for extra interest. I think this was 6 weeks of mortgage because we completed in mid-August. I've then got the monthly payment thereafter, the value of the property, so the amount we bought it for in this case, and the loan to value. Now you should be able to find all this information on your mortgage offer document, or if you can't find it, then it's a good idea to ask your mortgage broker to supply you with that information. Then we have 6 columns. So the first column is the date of my monthly mortgage payment. And then we have how much mortgage is outstanding, so how much we actually owe to the bank. We then have the monthly payment amount. Now you can see here that I'm on a fixed mortgage, so nothing changes for all these different months. My payments are the same every single month. Then I have 2 columns which are a breakdown of that monthly payment. So one column is for the interest I pay to the lender, and the other column is how much equity I'm repaying per month. Now I've actually worked all this out myself, but if you get stuck you can always ask your broker for help. The final column I have here is the amount of equity that I have in the property. Now I like this column because I can see whether I'm on track. It also makes me feel more wealthy. So rather than thinking to myself, oh no, I've still got all this to pay off, I can actually see what equity I do have in the house, and that makes me feel better. So that's a mindset tip for you. Okay, so let's go from October and our normal regular payments for ease of the maths. I'm not going to go through September because it was a bit more complicated due to it being the extra number of weeks. But in October, the amount we owe is £361,405.78. Our monthly payment is £1,272.93. That's the fixed amount I'm paying every month. Now how do we work out the interest in the repayment columns? Well, we take the amount we owe, £361,405.78, and we times it by the interest rate from up here, which is 1.64%. We then divide it by 12 months to give us the amount of interest we pay in this particular month, and in this case it's £493.92. Now if that's the amount of interest we pay this month, and we know our mortgage payment is £1,272.93, anything over and above the £493.92 interest must be coming off the mortgage principal, i.e. that's the repayment part. So £1,272.93 minus £493.92 equals £779 and a penny. And that £779 and a penny gets added to the equity column from last month, giving us equity now of £63,579 and a penny, and it also comes off the amount we owe the lender next month. So the £361,405.78 less £779 and a penny that we've overpaid effectively comes to £360,626.77, which we can then put in the column for the following month. So I'm hoping this makes sense to you all. This is particularly good if you've got a fixed mortgage, because you can then extrapolate out to find out exactly how much you owe at the end of your fixed mortgage term. So it's really, really helpful, and it puts you in control. And I always say that control is really, really important when you're looking at any kind of personal finances. So tip number 3 then is to overpay when you can. Even if you're on a fixed interest rate, most mortgage lenders will allow you to overpay up to 10% of your mortgage principal without incurring any early repayment charges. And if we look at my spreadsheet, we can see here that I overpaid £5,000 in July 2019, and I adjusted my figures accordingly. Tip number 4, you want to pay particular attention to overpaying your mortgage when the interest rates are low. Now, I don't feel that the Bank of England base rate is going to rise too much anytime soon. Obviously, at the moment, the Bank of England base rate is 0.1%, which is the lowest it's ever been in history. And the Bank of England has to be very careful about raising that interest rate due to the economy and what's happening at the moment, particularly with coronavirus and Brexit. So what I will say is, with mortgage interest at its lowest point, now is the best time to overpay your mortgage if you're going to do it. It's no good waiting for interest rates to go up to 1-2% again, because then it might be a little bit too late for you. You're going to get the best bang for your buck if you overpay your mortgage now, while interest rates are low. This brings me on to my 5th tip for you. Try to reduce your loan to value every time your mortgage comes to the end of its initial rate. So if we go back to my spreadsheet over here, we can see that I bought this property on an 85% loan to value mortgage, and as a rule of thumb, the higher your loan to value, the higher your interest rate usually is with the lender. So it's in your best interest to reduce the loan to value so that you get a more favourable interest rate over time. Now, the best way to do this is to use a double whammy approach of both increasing the value of your home whilst also overpaying your mortgage. So last year we were delighted that our property had risen in value to £450,000. Not because we'd done any work to the property or because we wanted to move or anything, but because the market in my hometown is quite buoyant at the moment. So we were pleased about that. Also, we can see from the spreadsheet that I overpaid it by the £5,000 that I talked about just now. And that was to get the mortgage to the level that it needed to be. In this case, 75% of 450,000 was 337,500. But because I'd worked out my spreadsheet in advance, I knew I wouldn't be able to do that unless I overpaid the mortgage by £5,000. Now we can see on the spreadsheet here where I've written in about changing the mortgage rate, and you'll notice that my interest rate is slightly higher than my initial rate. Now, despite me just saying that rates are usually more favourable at a lower loan to value, the reason that this rate is slightly higher is because during my 2-year initial fixed term, Virgin Money had hiked all their interest rates up. So if I wanted to get an 85% loan to value mortgage again, my interest rate would have been about 2.3%, my mortgage payments would have been around £1,500, which is quite a lot more than I was paying at the moment. So I wanted to keep that nice and low, so refinanced at 75%, which got me the most favourable rate at that time. Okay, it's still a little bit higher than I was paying before, but it was certainly better than anything else they were offering, and certainly better than remortgaging the property, which would mean me having to pay extra solicitors' fees and things. So I hope all this makes sense to you guys, and this is why it's such a good idea to review your mortgage every year, couple of years, just to make sure that everything's going well. And when I look at my spreadsheet, I look at it every single month, and I make sure that we're on track every single month, so I know exactly what's happening there, because it gives you that sense of control. goal. So 5 top tips there for you then, guys, on paying your mortgage off quickly. Do give me a thumbs up underneath this video if you liked those tips, and do let me know how you're getting on. Are you currently trying to pay down your mortgage? How are you getting on with all of that? Do pop me a comment underneath too. Also have a watch of these 2 videos up next because they will definitely help you with your wealth journey. Subscribe to the channel if you haven't done that yet, and in the meantime, guys, thanks ever so much for watching this one. Stay safe, and I'll see you in the next one.